WeMasterTrade. We copy trade.
Good day to everyone joining us from around the world. Whether you are just waking up midway through your trading session or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Hayden and I will be guiding you through this season today. Skilled traders, mentors, role models within our community. First, let me introduce the ever-composed, always insightful honors. Welcome, honors.
Thank you so much, Hayden.
Who have taken charge of their financial.
Spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rule, but about the ecosystem that WeMasterTrade offer, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trade, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chart and conversations. He's strategic, he's sharp, and he's a real force in our trading space. Welcome, please welcome Rao.
Thank you, Hayden, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotion to scaling and long-term profit sharing. If you have ever had questions or even doubts, today is the day to ask them.
And that's exactly what we are here for. Whether you are brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just the highlight reel. Over the course of these sessions, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional brokers or pro firms. Now I want to be clear. This isn't about sale. This is about understanding. We want you to know what you are signing up for, what kind of structure supports your journey, and how you can use that structure not just succeed but scale.
And speaking of structures, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funded project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade builds on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flow everything we offer, from especially our training packages, we will be discussing in detail and we will blend them the logic behind each one. And what kind of trader they ever look at our packages and through which one is right for me. Today we will answer that.
And more than that, we will also do a live comparisons between packages. We will break down pricing, account size, maximum drawdowns, consistency rule, and even payouts side by side to help you make fully informed decisions. This is one thing to see numbers on the website. It's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is on way, how do I stay compliant while trading? So we move naturally into discussing trading rules, which honestly is one of the most important parts of today's sections. We will explain what the loss is and how it's calculated, why it includes both closed and floating profit and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstandings about trade sizing and risk for trade policies.
And we want to learn through in isolation with random in the context of live trading decision. I share some personal mistakes I make when I first start trading under funded conditions and how I adjusted because rules mean restrict you, they dare to protect you in the entirety of your home.
And while we are on the topic of helping you succeed, we will be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We have had some amazing response to our promotions, but also some confusions. So we will be showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. And this is the heart of what makes us different from platform. When you trade on a funded account and generate profit without breaking rule, we say that profit with you up to 90%. But there's more to it, that's just the percentage, and we will explain the full payout cycle, ratio, and timeline today.
Now, I know many of you watching today aren't just traders. You are also educators, influencers, or people with large networks. That's why we are also taking time to explain our affiliate program, and we will do it transparently. We will walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So as you can tell, this is not just a surface level live stream. We are diving into everything: packages, rules, promos, scale up paths, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderator are watching and will answer as many questions like we can. Your voice matter.
And if you are watching this on replay, don't worry, we will leave timestamps and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about helping traders succeed.
To wrap up this webcam, I would like to say this: WeMasterTrade is not just a platform, it's a commitment to build real traders, to create fair, structured, and scalable pathways for people around the world who are serious about trading as a profession, not a game. So, if you are here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together, and let's begin. And once again, welcome to WeMasterTrade live stream. Thank you once again for being with us today. Now, before we dive into packages, trading rules, and promotional plans, promotional mechanics, we want to take a moment to zoom out and offer you the full picture of who WeMasterTrade really is, what we believe in, and why we have built this platform the way we have. Because when you are putting your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so this next segment is about origins, intentions, and impacts. It's about how WeMasterTrade began, what values underpins the firm, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined as always by two people who live and breathe these principles, Honest and Ralph. Let's start at the beginning.
Thank you, Hayden. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission: to give a capital trader access to capital regardless of their background, location, and financial institution. We were founded in 2022 as part of WeCopyTrade Group, headquartered in Vancouver, Canada, while CopyTrade with name on Signal Sharing, Investor Network, and Copy Trading Tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their savings.
And it's important to note that WeMasterTrade is not broker. That's not just a label, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we have built, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, and you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structures. That's why we have invested heavily into WeMasterTrade Academy, a training ecosystem built to take you from beginner to a consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementations. We have designed the curriculum to match the real-world trading environment within WeMasterTrade, and what you learn you can apply directly to your funded account. And to ensure that our systems and content meet global standards, WeMasterTrade is proud to hold an ISO 21018 certification, which confirms that our educational products and traders development programs meet rigorous international criteria for quality, structure, and learner engagement.
And that certificate is a big deal because it's a long-term commitment to developing traders, not just collecting fee in an industry where many college platforms come and go. WeMasterTrade has positioned itself with real operational stability and compliance framework and internal accountability. We're not here for a season, we're here to help build career.
And we have seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa are on talking about how WeMasterTrade help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail broker. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had students become full-time traders, we have women re-enter the finance world after career breaks, and we have young professionals from underbanked regions finally access the markets with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain the regularly updated blog sessions where our team of experts and educators share weekly insights, trading psychology breakdowns, market reactions, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's also talk about culture. What makes WeMasterTrade different isn't just the product offering; it's community mindset. We actively promote trader integrity, respectful competitions, and knowledge sharing. Whether you are in a Telegram group, watching our YouTube series, or engaging with us on live support, you will see that we actually listen.
And as big honestly here in many platforms, the trader is your customer. At WeMasterTrade, the trader is a product. Your performance drives the business. Your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare and something we're proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funding accounts, and connect with people who have gone through the system. The stories are real, the capital is real, and the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We are here to challenge the status quo of trading access, to build systems that reward performance over promotions, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a profile. It's a trading movement, and if you are ready to be part of it, today's live stream will show you everything you need to know. Thank you, Honest and Ralph, for that deep and honest walkthrough. Coming up next, we're going to take this foundation and connect it directly to our actual offering. That means we'll be discussing all of the different account packages available at WeMasterTrade, how they differ, who they are designed for, and what kind of results you can expect from each. Now that we have explored who WeMasterTrade is and the principles we stand for, it's time to move into one of the most essential parts of this live stream and an in-depth discussion on our account packages. This is where it all begins for most traders, choosing structure that best aligns with their goals, their style, and their current skill level. And when we say packages, we are not just talking about dollar figures, we are talking about frameworks. Each packages at WeMasterTrade represent a different pathway toward growth. And today, we will walk you through all of them, what they offer, how they are structured, and most importantly, who they are designed for.
It's not like hidden. At WeMasterTrade, we don't believe in one-size-fits-all model. That's why we built three product line for trader: the challenge package and the instant funding package. Its line include a variety of account size and configuration because we know that traders come with a different strength, risk capacity, and timeline.
So let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. Its structure is fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulator account and your goal is to meet specific profit target. And while staying within strict but reasonable risk parameter, there are three stages in total: phase 1, phase 2, and then the final stage.
Take for instance our $10,000 challenges, a great starting point for traders who want to minimize upfront cost while building a track record. Let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target with 800 without risking a 5% daily loss or 10% overall loss limit. You have unlimited time to achieve this, so that a key difference from many platforms, and we don't pressure you with deadline.
And once you pass phase 1, you will move to phase 2 where your profit target drops to 6%, which is $600. The risk rule remains the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, one power phase clear, you enter the funded account where you trade with the real capital, have no profit target, and your profit share jump to 90%, that's one of the highest in the industry.
So who is the $10,000 challenge best for? This account is ideal for newer traders or experienced traders who want to start with a lower pressure and learn the system. If you are still refining your strategies or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer $25,000, $50,000, and $100,000 challenges packages. The structure is similar to phases, and the same 5% daily and 10% total loss limits, but the profit targets scale proportionally.
For example, in the 50,000 challenge, you need to achieve 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the level remains the same 1 to 100, giving you room to adjust position sizing.
So who are the mid and high tier challenges best for? The 25,000 to 100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. If you are already past all the broad challenges or have a strong verified trading history, this is a good step up.
Every challenges packages comes with a one-time fees. For example, just $45 for the $10K challenges. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you are eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based purely on results? That's where our instant funding packages comes into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding models is designed to give experienced disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading backed by a structured, fair and transparent system.
And what makes it ever more accessible is that you can choose from several different account types, depending on your style, preference, and goals. Today we will walk you through it of 5 main instant funding packages: standard 51010, 510 euro, 510 OBC, and customized. We compare the detail, but more importantly, we help you to figure out which package is right for you.
Let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means that no challenges phases, no evaluations. You place one, follow the rules, and you are trading live's capital. And every account, no matter the size, includes no time limits, up to 30% profit share, scale up plan toward $1 million, support for EA, swing trades, scalping, and even the HFT. Now, let's go packages by packages, and as we go, honest and rough, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you have seen succeed with each?
Let's start with the standard package. I always try this one as the best friend for traders who want stability and getting up to 200,000 in capital, and with a very manageable 4% daily lot limit and 6% overall limit.
It's like that counts the account that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And how about commissions?
And across the board, competitive across the board, Forex at $5 per slot, Golf at $6, Indy at $0.5, Stock at just $0.07.
And everything is allowed: news trading, scabbing, weekend holding, EAs, HFT, you name it.
So for the audience, if you are someone who trades regularly, understands your strategy, wants a full range of assets, and plans to play the long game, this is your sweet spot.
So it is perfect for intermediate to advanced traders who already know their edge, but don't want to stress with a target-based challenge. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I also say it's a swing trader. The 4 or 6% risk profile gives just enough flexibility to hold multiple day positions, especially with weekend holding fully allowed.
Alright, moving up a gear. Let's talk about the 510 packages. Same capital ceiling up to $200K, but you now get 5% daily loss and a wider 10% overall limit. Why does that matter?
Well, that execution is massive for traders who scale into positions or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping, EA, new trading. It's very trading friendly.
And this is best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you got a tested intraday strategies and just need some risk breathing room, this is your package.
And also for traders who want structure but don't mind having that profit target, the clear milestone motivates some people, especially if they payout oriented.
Now here's the personal favorite, the 510. You get 5% daily and 10% overall loss, but no profit target, non-zero.
And that's a blessing for high position trader. They're no longer chasing a number. That's just focus protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
Veteran swing trader, reconstruct trader, people who prioritize concept over spec, if that's you, to right here.
And let's be honest, not everyone wants to hit target. Some just want to trade well and scalp cleanly. This is the home.
Now for the rule breakers, or rather, those who do want to be evaluated on how even their profits are. The 5-10-10 no PC removes profit consistency tracking, right?
Exactly, same 5/10 risk profile, but you are not required to keep your profit growth smooth.
And that's trader copier are not allowed in this one, so it's for manual trader only, and you need to trade responsibly, but aggressive trader who sometimes hit big spike, this is the play.
So who is it for? It's perfect for high risk, high reward traders or anyone who had issue with consistency rule at other firms. You trade how you want, just keep it inside the drawdown box.
And last but not least, the customized packages. This WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking, plus you can fund up to 400,000 or more than any other account.
It's premium, flexible, and comes with on trading style alone, including EAs, net trading, weekly holding, HFT, and more. Top tier professional as hedge fund traders, signal providers, high volume traders, anyone with a very specific structure in mind, this package lets you build it.
I always say if you try our model and nothing quite fit, build on your blueprint with a customized that freedom is rare.
To sum up, every Eastern funding packages we offer comes with clear risk parameters, fair commissions, deep market access, and real profit potential. There are no time limits, and payouts just start as early as 1 day in.
And no matter your strategy, scoping, swing, echo, and or manual, there are account that align with you. The key is the picking right one now, so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
Up next, we will walk you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules that power our entire platform. Alright traders, now that you have seen the packages, let's talk about the part that either makes or breaks your account. That's right, that is time to dig into the trading rules and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account, it comes down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule that traders think they understand until it kicks them out of their account at 3:70 p.m. on a random Tuesday.
But here's the good news, once you understand how it works, really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
And it's the maximum amount of loss you're allowed to incur in the both floating and close trader on any single trading day if your equity fall below that limit. And even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
Let's go through a live example. Imagine it's start of day 5. Your balance is $105,000. Your equity, however, is higher, $107,000 because of open floating profit.
And if you're on the 4% daily loss limit, we calculate of the target number at 107,000.
So 4% of 107,000 is around $4,000. That means your equity for the rest of that day can't drop below 102,000 or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say it's the start of day 7, your balance is 100 but your equity is 99,000 because your open trades are slightly in loss.
Since balance is higher, we pay the 4% on initial balance, so 4,000.
So now your equity must stay above $96,000 throughout the day. If it drops to $95,900, auto liquidation kicks in. No warning, no margin call.
The system will send a market order to close on trades. Everything liquidates, your account is disabled, and you can't trade again unless you purchase a new package.
And here the kicker, the auto close happens when the system detects the reservoir crosses. But due to market fluctuation, your final P&L might look worse than the actual result, and that because the system executes the closure based on your slippage and at the time liquidation.
So even if you only intend to take a $3,900 loss, one slippage spike in gold and or Nasdaq and suddenly it's $4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule, because this is where the broke mindset kicks in.
First tip, know your buffer. Never plan trade to take you right up to the edge of your limit. Leave 10 to 50% room below that, the mark loss, especially in volatile market.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day. But if your floating loss is tracking your equity, you are heading toward a violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide risk dashboards that show your live loss status. Use them, check them, don't rely on memory.
Also about trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade to your way back up.
Another big one, trade smaller during news hour. If you are trading gold during NAB with full loss size, you are practically begging to break the daily loss rule, cut position size and ride pause volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number 1, over leveraging, trader opening position that are 5, 6, 7% of their account and thinking they close quickly, but if the trade turn red flag, it's already too late.
Number 2, holding overnight without checking exposures. If you hold 3 trades overnight and wake up to a 60 bip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matter. They are not. Remember, equity includes both floating and closed positions. The total equity line is your score.
I always say this to new trader, the daily loss rule isn't your enemy, it's your account error, and it designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box, and if you learn to trade inside the box, you will last longer than 90% of the market.
And one last note is that this isn't just about rule, it's about trust. WeMasterTrade funds you because you trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. Coming up next, we will move to about the mass loss, but now we will have a short break.
copy trade. We copy trade. We copy trade. copy trade. Copy trade. Copy trade. Copy Trade.
Welcome back, traders. In the previous segment, we covered the daily loss rule, and if you haven't already clipped that one, you are missing out. But now we move from the daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account's stop loss, the line that can be crossed. Not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how it work, how the rule work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip it away their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If the limit is hit, it means the account is still unsalvageable under your current trajectory and is closed immediately.
So what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is your real-time capital including open trades, it ever drops below the certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss which reset every day, this one doesn't reset. It accumulates. You can lose 2% one day and 3% the next. And if your total loss across the line, that's it.
And the percentage limit depending on your package is typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of $50,000 and your max loss limit is 6%, which is $3,000.
And that means your equity can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday and total loss from highest point back down, that result in what matter.
And remember, this rule includes both closed losses and floating losses. So if you have lost 2,000 in closed trades and you have another 1,200 floating in red, your equity is now up 46,800. That's below the limit. Account is closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stands in real time relative to that stop loss floor.
And here where it went interesting a little tricky. Let's say your account grew to 51,000 current rate, you in profit.
But your max loss limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fund before you hit it.
Exactly. You now have $4,000 in total cover because 51,000 minus $47,000 equals $4,000. So your profit gives you cushions, but the floor never moves.
So what happens when you break it? Once your equity drops below that maximum threshold, Even by a few dollars, our liquidation triggers on trades are closed immediately at market price.
And again, like with the daily loss, if the volatility or sleep at your account might close out below that line, that's just execution reality.
And most importantly, once it breaches, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this room without constantly worrying about it?
First, check your total close losses every day. You should always know how you close to your mark loss floor. Don't wait the dashboard warning calculate manually.
Second, use your profit as protections, not permissions. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gain by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
4. Stay cool when you close. If you're down 5% out of your 6% limit, that is not the time to double down, that's the time to step away, pound, and rethink the entry.
So the biggest mistake, underestimating floating drawdown. Traders close 3 losers and think, okay, I still got room. But they forget about the 4 trades floating minus $1,800.
Second, trade who trade recovery after a big day. They lose 3% in one day and come back to win the next, and they thinking well they make it back, and instead take another 2% boom violation.
Third, and this one hurts, ignoring slippage during major news. Even if with a tight stop, news candles can gap you trade through your limit.
The mark loss rule is there for a reason. It's not there to punish you, it's there to protect you from doing yourself. Every successful trader I know say that stop loss, whether personal or institutional, at non-negotiable boundary.
Right, it's a reality check. If you are consistently pushing up against your mass loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we are not just giving capital, we are teaching structure, and the mass loss rule is what separates gamblers from professionals. So remember, your max loss is the percentage of your starting balance, typically 6% on 10%. It's calculated using equity, not balance. It includes both close and floating losses, and once breaches, your account is gone. Coming up next, we'll explore the consistency rule and why steady profit matters more than big spikes when it comes to growing, scaling, and getting paid.
If you ever make 5,000 in one day and then make 200 the next 4 days, and wonder why your payout got fresh, and this next segment is for you. Let's dive into the rhythm of profitability and how to stay consistent under WeMasterTrade model.
Alright traders, we have talked about the daily loss limit, and we have just covered the maximum loss rule, 2 pillars of protecting your capital. But now it's time to shift gears just a little and talk about not about risk, but about results. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need to more than just a winning day. You need something called profit consistency.
And this rule right here, the profit consistency rule, is what the celebrate a lucky spike from a reliable trader. It tells us whether you can make money over time, or if you are just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, and even scale up. So if you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is the measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio. The less consistent meaning you had one chance profit day and then smaller or losing days. The higher your ratio.
And the idea is simple. If 80% of your total profit come from one day, that's not consistency, that look or rich. What we want to see is trader who make profit day after day, even if it's small, and that's what we can scale.
So the formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
Best day divide total profit multiple 100 equal profit consistency percentage.
And just to be clear, bad days refer to your high close profit in a single calendar day. And total profit is a sum of your close profit minus any close losses or open losses across the line of the account.
Let's say you have had the following results over 5 trading days. Day 1, $100, day 2, $200, day 3, minus 50, day 4, $100, and day 5, $60.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equals to 410.
And your best day was day 2, that's $200 profit.
So now we apply the formula. 200 divided by 410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now let's say your account requires 20% profit consistency with e-commerce. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they are not consistent enough. They have one big day that made up almost half of the total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to trader. If you're relying on 1 or 2 big days to carry out your entry account, that's not professional trading, that's volatility, and you can get lucky, but you're gonna finish thing.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the ones who get scaled, who get features, who get strategic with more capital.
Alright, let's address the number. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. So let's say you are over the limit. Don't panic, you are not disqualified. You just need to keep trading and even out the curve.
Here how to do that. Trade smaller size for a few days. Take smaller control wins for 200 or 300 days. Avoid big swing trader that could buy your ratio again. Spread profit across multiple days, not one month setup.
And for those using EIs, monitor your equity curves. If your EIs is skewing profits heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this rule unless it configures with payout logic in mind.
Mistake number 1. Traders hitting target early, then taking the rest of the week off. That inflate your best day and leave the rest of your curve flat.
Mistake 2. Often trading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
Mistake 3. Thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master traders.
And why this rule matter? At the end of the day, this isn't about controlling you. It's about building habit and handle scale. And if you can be consistent with the 25,000, what happens when we give you 100,000 or more?
Exactly. Consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we have seen that time and time again. The traders who respect this rule, they are the ones who get multiple payouts, referrals, and growth into six-figure funded accounts.
So don't fear the rule, understand it, use it as a feedback tool. If your ratio is too high, great, that means you got profit. Now keep going and balance it out.
And remember, you don't need to calculate manually at WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We have walked through the daily loss limit, target the maximum total account loss, and examine how your profit consistency shapes your long-term payout and growth. And now we arrive at the final and perhaps most overlooked rule of O's.
That's right, traders often think the big enemy in the market, but truthfully isn't inconsistent, especially in how much you're risking from the one day to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing your position size. And if you're serious about scaling up WeMasterTrade, this rule is non-negotiable.
Let's break it down. And at its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial balance, account balance on any single trade idea.
And that includes all losses associated with a trade idea, both losses and floating losses, even fee commission, and swap are counted.
And for some accounts like the 510 OBC package, this rule gets even stricter. That the limit is 1% per trade year, not 2%.
Because the consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that makes you hard to scale.
And this rule protects both you and the firm. It helps reserve capital, prevent loss equity swing, and make sure your egg plays out over time.
Think of it as your account heartbeat. If your position size pulses up and down, 0.5 loss one day, 5 loss the next. The system flags it, does not structure that chaos.
This where it gets technical, but stay with us. The term trade idea isn't just one order, it's a group of trades that share the same logic.
If you open trade by position on go at different times, that's one trade idea.
You can see the same symbols, same directions, and close around the same time. Even if you open them at different times, they're seen as a single unified position from a risk perspective.
So the system doesn't look at your trades in isolations. It groups them into logical bundles and applies the 2% rule across the entire bundle.
And you can have multiple self-trade the trade idea as long as one respects the risk limit.
For example, if you go long on gold, short on GBP, GBY, and short on AUD/USD, and each position has its own distinct direction and asset. Those are three separate trade ideas, and each one can risk up to 2%.
Let's say you go buy on gold, and then you go buy again and again. You now have 3 open positions in the same direction on the same asset.
So,
Yep, the system treats that as one trade idea. So if the combined floating risk or eventual loss from those positions is 2% of your starting balance, boom, you have broken the rule.
Let's go hand-on. Suppose you have a $100,000 account. The 2% max risk per trade idea means you can lose more than $2,000 on any trade idea total.
So you open 3 to go buy one lot is you don't apply a stop loss, new hit, market drop 100 pips, and each lot loss at 100 that to 1000 that to 1000 total.
You are right on the line. If slippage or swap as a few extra dollars, that's it, rule broken, account flags or liquidated depending on enforcement model.
And on some accounts, especially in the funding accounts with stricter tolerance, this branch may result in loss of funded status or immediate closure.
Tip 1. Set your lot size based on your account risk, no emotion. Know how many pips equal 2%.
Tip 2. Use stop loss order religiously, set them based on risk per trade idea, not random chart level.
Tip 3. Don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one, size it accordingly.
And tip 5. If you want to split an idea into multiple entry, do it smart, scale in smaller, use micro lot if needed, and keep the total exposure below 2%.
So the most common reason traders break this rule, stacking multiple entries on one trade idea, thinking it still separate.
Second, opening high-risk trader after win, assuming they're placing with how many. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating rate still counts toward your 2% risk.
And why we enforce this rule? This isn't church policy. This is professional practice. Hedge fund follow this, bank follow this, and real trader follow this.
Exactly, we're not here to micromanage you, we're here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk is the foundation of scalable capital, those are the ones who we grow. Those are the traders who go from $25K to $1 million.
And if you want to be a professional trader, you have to think like one. And professional trader always know how much they're risking on every trade every day.
And if you are still guessing your lot size or opening trades because the setup feel right, check this as your sign, step it up and get structured.
This more than the rule is a habit. View it now, and the path to bigger capital and larger payouts becomes way more predictable. And that's, my friend, wrap up the 4 essential rules of trading at WeMasterTrade: daily loss, maximum loss, profit consistency, risk consistency. Master this, and you are not just staying compliant. You are building a foundation for serious capital management, long-term payouts, and scaling. You are watching the official WeMasterTrade live stream, and the best still to come. Alright, traders. So now we will coming up next. We will move to about the economic calendar.
Hey everyone, welcome back to our daily market rundown. It's Tuesday, November 11, and we have got a pretty active economic calendar today with a mixed data from Australia, Japan, the UK, and Europe. Though we also have a few bank holidays in major economies like the US and Canada, which could slow down trading volume later in the day, let's take a look at what's driving the market today. So we started the day with some strong data out of Australia. The West Park Consumer Sentiment Index jumped 12.8%, a huge turnaround from the previous minus 3.5%. That's a clear sign of improving confidence among Australian consumers, possibly due to stable inflation and hopes that the Reserve Bank of Australia might pause on future rate hikes. Then the NAB business confidence came in at 6, slightly below last month's 7, showing that business optimism had cooled a little but remained in positive territory overall. This mixed sentiment gave the AUD a more than left during the Asia session, though traders are staying cautious ahead of global risk sentiment later today. Next, Japan has a busy lineup this morning too. First, bank lending year-over-year rose 4.1%, beating forecasts of 3.8%, showing that credit activity in Japan remains strong. The current account was also impressive, posting a surplus of 4.35 trillion yen, way above the expected 2.26 trillion. That's a major positive for the yen and signals healthy export and investment inflow. Later we got the economy watcher sentiment at 49.1, slightly higher than both the forecast 47.5 and the previous reading 47.1. That tells us local consumers and service workers are feeling more optimistic about near-term economic conditions. Overall, these combinations of strong current account and upbeat sentiment supported the GBY in early trading. Moving on to the New Zealand, the inflation expectation Q-over-Q figure remained steady at 2.28%, exactly in line with the previous reading. That's a neutral result suggesting no new inflation pressures are building, and the RBNZ can maintain its current policy stance for now. Now over to the UK, where traders were closely watching the jobs report. The claimant count change came in at 17.6 thousand, lower than last month's 25.8 thousand, which means fewer people are claiming unemployment benefits. That's a positive sign. Meanwhile, average earnings remains steady at 5% and the unemployment rate edged up slightly to 4.9% from 4.8%. The overall takeaway, the labor market is still strong, but wage growth and rising unemployment show that the economy is cooling slightly. We also have NBC member Green speaking later today at 3:30 p.m. and his comment could give us more clues about how the Bank of England is viewing the inflation and employment outlook. Now moves to the Eurozone. There's no major data early on because the French bank holiday, but we will get the German ZEW economic sentiment at 5 p.m. Forecasts were for around 41.0 and the actual reading matched that optimism, while the overall Eurozone ZEW index came in at 23.5, up from 22.7 previously. That shows investor confidence in Europe continues to improve, especially with energy prices stabilizing. We are also waiting for China M2 money supply and new loans data, which are released tentatively. The forecast for M2 is 8.1%, slightly lower than 8.4%, and new lending is expected to drop sharply from 1.29 trillion to 4.65 billion yuan. If that happens, it could weigh on risk sentiment, since quicker Chinese lending typically signals slower growth momentum. Meanwhile, both the US and Canada are on bank holiday, meaning lower liquidity across the North American section. That could cause lower price movement during the US trading hours, unless something unexpected happens in the broader market. Finally, at 9:30 p.m., the UK CB leading index will be released, with the previous figure as minus 0.3%. It's a low impact indicator, but traders may still look at it for signs of economic direction heading into year. So to sum up today's landscape, strong Japanese data boosted the yen early in Asia. Australian sentiment rebounded sharply, supporting the AUD. UK jobs data shows slight cooling but remain resilient overall. Eurozone confidence improved, but trading might be quieter due to the US and Canadian holidays. That's the overall turn for Tuesday, November 11, a steady but cautiously optimistic trading day. Thanks for tuning in, traders. I'm Ralph, and I'll see you in the next live update. Stay sharp and trade smart.
Thanks, Rob. Before we wrap up today's sessions, I just want to say thank you to everyone who joins and spent your time with us. Remember, growth doesn't happen overnight. It comes from small, consistent steps every day through learning, practice, and perseverance. And if you have any questions and thought we would like to share, feel free to leave a comment or reach out to us directly. We are always here to support you. Don't forget to follow our page, like this video, and share it with your friends who might find it helpful. Your support truly means a lot and keeps us motivated to create more valuable content for you. See you in our next live sessions, where we will keep exploring, learning, and moving closer to our goal together. Have a productive and inspiring day ahead. Thank you and see you soon.